They're hiding the biggest financial collapse in history. Not tomorrow, not someday, 2026. And what makes this different from 1929 and 2008 is that this time, the crash doesn't just wipe out portfolios, it erases the currency itself. The dollar is entering stage 4 of a 6-stage collapse pattern that has killed 4 major currencies in the last 100 years. The German mark in 1923, the Argentine peso in 1989, the Zimbabwe dollar in 2008, the Venezuelan bolivar in 2016. Every single one followed this exact pattern. And right now, while you're watching this, central banks are executing stage 4. Panic buying gold. Not because gold is going up, because the dollar is going down. And they know exactly when it happens. Let me show you the timeline. Stage 1 is economic imbalance. This is where structural problems begin. Trade deficits become permanent. Budget deficits become normal. The country imports more than it exports. The government spends more than it collects. Manufacturing moves overseas. The economy shifts from production to consumption. Debt starts accumulating but stays manageable. Everyone assumes this is just modern economics. The United States entered stage 1 in 1971 when Nixon ended the gold standard. For 54 years we've been running deficits. The 2024 trade deficit was $1.2 trillion. We imported $1.2 trillion more than we produced. The budget deficit was $1.8 trillion. The government spent $1.8 trillion more than it collected in taxes. This isn't temporary. This is the foundation. This is stage 1. Stage 2 is excessive debt accumulation. The imbalance from stage 1 requires financing. So the government borrows, issues treasury bonds, promises to repay with interest. At first, the debt grows slowly. $1 trillion took 200 years, from 1776 to 1981. Then it accelerated. $10 trillion by 2008, just 27 years, $20 trillion by 2017. 9 years to double. Now it's $37 trillion in 2025. We added $17 trillion in 8 years. This is exponential acceleration. And here's where it becomes unsustainable. The interest payments. Right now, the US pays $1.2 trillion per year just in interest. Not paying down the debt, just interest on money already borrowed. That's more than the defense budget, more than Medicare, just interest. And if rates stay at 5%, those payments hit $1.8 trillion by 2027. That's 6% of the entire economy going to service debt. Not build infrastructure, not fund programs, just service existing debt. This is stage 2. The debt becomes mathematically unpayable through normal means. Stage 3 is loss of international confidence. Other countries hold dollars. They hold treasury bonds. They use dollars for trade. But they're watching the debt numbers. They're doing the math. And they realize the US cannot pay this back. So they start diversifying. Quietly. No announcements. No speeches. Just steady reduction of dollar exposure. The data is clear. In 2000, 71% of global reserves were dollars. By 2020, that dropped to 59%. By 2024, it's 58%. We're losing reserve currency status. Slowly, steadily, irreversibly. China reduced treasury holdings from $1.3 trillion in 2013 to $775 billion in 2024. A 40% reduction. They're systematically dumping dollars. Japan reduced holdings by 15% since 2022. Saudi Arabia is accepting yuan for oil, breaking the petrodollar. The BRICS nations created alternative payment systems, currency swaps that bypass dollars entirely. This is stage 3. The world is losing confidence in the dollar. Stage 4 is panic diversification by central banks. This is where we are right now. This is the stage the dollar entered in 2024. And this is where the pattern becomes impossible to ignore. Central banks aren't just reducing dollar exposure anymore. They're panic buying alternatives, specifically gold. In 2022, central banks bought 1,136 tons of gold. the most since 1950. In 2023, they bought 1,037 tons. In 2024, they bought 1,045 tons, 3 consecutive years above 1,000 tons. The 2010 to 2021 average was 473 tons per year. They more than doubled their buying. This isn't diversification, this is panic. Poland bought 90 tons in 2024. Their central bank president openly said gold should be 20% of reserves. China officially bought 331 tons between 2019 and 2024. But independent analysts estimate they hold 4,000 to 6,000 tons. They're buying in secret, off the books. Because if the world knew China was dumping dollars for gold at this scale, it would trigger the collapse before they're positioned. India bought 77 tons in 2024. Turkey bought gold. Hungary bought gold for the first time in 3 years. The Czech Republic bought gold every single month for 30 consecutive months. Every month. This is coordinated behavior, not explicit coordination, implicit alignment. Every central bank sees the same data. Every central bank knows the dollar is in stage 4. Every central bank is preparing for stage 5. And here's the key signal that stage 5 is imminent. They're buying gold at record high prices. Gold is at $4,200 per ounce, the highest price in history, and central banks are still buying aggressively. That means they're not buying because gold is cheap. They're buying because they know the dollar is about to get much cheaper. When central banks panic buy gold, despite record prices, they're telling you stage 5 is coming. And they're telling you they know when. Stage 5 is hyperinflation outbreak. This is where the currency enters terminal decline. It starts with a choice the government cannot avoid. They owe $37 trillion. Interest payments are $1.2 trillion annually and rising. They cannot pay through taxes. Tax revenue is $4.9 trillion. They would need to raise taxes by 50% just to cover current spending plus interest. Politically impossible. They cannot pay through spending cuts. The 3 largest expenses are Social Security, Medicare, and interest payments. You cannot cut Social Security without destroying your political party. You cannot cut Medicare without mass outrage. You cannot cut interest payments without defaulting. Everything else combined isn't enough to close the gap. So they have one option: print money. The Federal Reserve creates new dollars, buys treasury bonds from the government gets cash to pay bills. But those new dollars dilute the existing supply. More dollars chasing the same goods means prices rise. Inflation. At first, it's manageable. 5%, then 8%, then 12%. People start to panic. They buy real assets, real estate, stocks, gold, anything except cash. This drives prices higher, which causes more inflation, which causes more panic buying. The feedback loop accelerates. Inflation hits 20%, then 30%, then 50% annually. At this point, the currency is in free fall. People refuse to hold it. They spend immediately. Stores change prices multiple times per day. Workers demand daily wages because monthly pay becomes worthless by month end. The government prints larger bills. Zimbabwe issued a $100 trillion bill, not as a joke, as actual currency needed for daily transactions. This is stage 5. And based on historical patterns, the transition from stage 4 to stage 5 takes 18 to 36 months. We entered stage 4 in 2024, when central bank gold buying hit records for the 3rd year. That means stage 5 could begin as early as mid-2026, almost certainly by 2027. Stage 6 is total currency death. The currency becomes completely worthless. Not worth less, worthless. People refuse to accept it. Barter becomes normal. Foreign currencies become the standard. In Zimbabwe, people used US dollars and South African rand. The Zimbabwe dollar ceased to exist. In Venezuela, people used dollars and Colombian pesos. The bolivar still technically exists, but nobody uses it. In Argentina, after multiple currency deaths, they adopted the US dollar. The peso exists, but dollars are preferred. In Germany, after the mark collapsed, they introduced the Rentenmark, had to completely restart the monetary system. This is stage 6. Savings in that currency become worthless. Retirement accounts vanish. Bank deposits evaporate. Everyone holding wealth in that currency loses everything. Everyone holding hard assets preserves wealth. Now let me show you the timeline. Right now, late 2025, we are in stage 4. The markers are clear. Central bank gold buying above 1,000 tons annually. We're seeing it. Dollar share of global reserves below 60% and falling. We're at 58%. Major holders reducing treasury positions. China down 40%. Japan down 15%. Alternative payment systems operational. BRICS payment system launched 2024. These markers are all present. We are in stage 4. The transition to stage 5 begins when you see these signals. First signal is fiscal crisis, a debt ceiling standoff that goes too far, a government shutdown lasting weeks, a failed treasury auction where buyers don't show up. Any of these triggers panic. Second signal is inflation acceleration, not 3 or 5%, double digits that persist, 12%, 15%, 20%. Once inflation breaks double digits and stays there, stage 5 has begun. Third signal is currency intervention, emergency Fed measures, currency swaps with foreign central banks, capital controls limiting dollar outflows. These are desperation moves. Fourth signal is gold revaluation. The government announces return to gold backing. They revalue gold from $42 per ounce to $10,000 or $20,000, whatever makes their balance sheet look solvent. This is the final stage 4 signal and immediate trigger for stage 5. Because once gold is revalued upward, the dollar is revalued downward. Everyone realizes simultaneously the dollar is dying. You have 18 to 36 months from stage 4 entry to stage 5 outbreak. We entered stage 4 in 2024. That means stage 5 begins somewhere between mid-2026 and end of 2027. The most likely trigger is 2027. Why? Because that's when interest payments hit crisis levels. That's when the debt ceiling becomes existential. That's when accounting tricks run out. The government chooses between default and money printing. They always choose printing, and that triggers stage 5. Here's what you do. You have maximum 24 months, more likely 12 to 18, to position before stage 5. Once hyperinflation starts, your window closes. Gold spikes beyond affordability. Dealers run out. Premiums go to 50%. Capital controls prevent moving money. You're trapped, holding dollars, losing value daily. Act now. Week 1. Buy physical gold. Not ETFs, not mining stocks. Physical gold you hold. Start with 1 ounce. American Eagles, Canadian maple leafs. Take delivery. Store securely. Not bank-safe deposit boxes. Banks restrict access in crisis. Target 15 to 25% of liquid net worth in gold. Week 2. Minimize dollar assets. Keep only 3 months' expenses in cash. Convert everything else. Week 3. Eliminate bonds. Treasury bonds, corporate bonds, all bonds denominated in dollars. You're lending money that gets repaid in devalued currency. Sell all bonds. In retirement accounts, reallocate to stock funds with hard assets, real estate funds, commodity funds, anything but bonds. Week 4. Buy productive real assets. Rental properties generating positive cash flow. Farmland producing food. When currency collapses, the land still exists. The property still generates rent. Prices rise nominally but preserve purchasing power. Month 2. Diversify internationally. Open foreign bank accounts. Switzerland, Singapore, Norway. Countries with low debt and sound policy. This is legal. This is protection. Consider foreign real estate, not vacation property, investment property with rental income in non-dollar currency. Month 3. Build skills and community. When currencies collapse, what matters is what you produce. Medical skills, agricultural knowledge, repair skills, electrical, plumbing, carpentry. Connect with local.
Community. People with resources, land, tools, knowledge. Community matters when systems break. Let me show you who wins and loses. Winners are obvious. The government. They erase 25 trillion in real debt burden. Politicians. They avoid spending cuts or tax increases. The wealthy. People with assets, real estate, stocks, businesses. Those inflate nominally. Early gold buyers. If you bought at 2,000 and it goes to 20,000, you preserved and gained wealth. Foreign governments with gold. China, Russia, India. Their gold revalues too. Losers are the people who make the system work. The middle class. People with savings in dollars. Retirees on fixed incomes. Their purchasing power evaporates. Bondholders. You're repaid in devalued dollars. You lose 70% real value. Pension funds. They hold billions in bonds. Pensions collapse. Workers. Wages lag inflation. Always. Renters. Landlords raise rents to match inflation. Wages don't match. People get priced out. Small businesses. Can't raise prices fast enough. Margins collapse. The American dream dies because the currency died. This has happened before. Weimar Germany, 1920s. Couldn't pay war reparations. Printed money. Mark collapsed. Hyperinflation destroyed middle class. Government debt erased. Argentina multiple times. 1980s, 1990s, 2000s. Couldn't pay debt. Devalued peso. Savings evaporated. Debt disappeared. Zimbabwe, 2000s. Printed money for deficits. Dollar became worthless. Wheelbarrows of cash for bread. Government debt gone. Venezuela, 2010s. Printed bolivars. Hyperinflation destroyed economy. Debt eliminated. The pattern is universal. Government over-indebted. Government devalues currency. Savers lose everything. Government survives. The US is following the same script. They're calling it strategic reserve management, monetary modernization, financial stability policy. But the outcome is identical. You lose. They win. Here's what you need to understand. This isn't theory. Central banks are buying gold at record levels right now. They see what's coming. They're preparing. The question is whether you prepare too, or whether you're collateral damage. The dollar is in stage 4. Central banks are panic buying. Timeline to stage 5 is 12 to 24 months. Your window is closing. Buy gold. Convert dollar assets. Diversify internationally. Build skills. Do it in the next 60 days. Because once stage 5 begins, it's too late. Your savings evaporate. Your retirement vanishes. Your purchasing power collapses. Governments who prepared survive. Savers who didn't get destroyed. The choice is yours, but make it now, while you still can.